Good morning, my dear students. Our today's topic is balance of payments. Every government keeps a record of all the transactions that takes place between the country and the rest of the world during a given period of time. This record is termed as the country's balance of payments. Balance of payment is an accounting statement that provides a systematic record of all the economic transactions between residents of a country and the rest of the world in a given period of time, usually 1 year. It is comprehensive and follows double entry system. Residents of a country include individuals, firms, and government agencies. However, residents do not include diplomatic staff, foreign military personnel, tourists, migratory workers, and branches of foreign companies, even though they work and operate within the domestic territory of the country. What do you mean by economic transactions? Economic transactions refer to those transactions which involve transfer of title or ownership of goods, services, money, and assets. They are broadly categorized as visible items. These include all types of physical goods which are exported and imported. These are called visible items as they are made of some matter or material and can be seen, touched, and measured. The movement of such items is open and can be verified by the custom officials. Invisible items. Invisible items of trade refer to all types of services like shipping, banking, insurance, etc., which are given and received. These are called invisible items as they cannot be seen, felt, touched, or measured. Unilateral transfers. Unilateral transfers include gifts, personal remittances, and other one-way transactions. Capital transfers. Capital transfers relate to capital receipts through borrowings or sale of assets and capital payments through capital repayment or purchase of assets. Balance of payments accounting uses the double entry system for recording the transactions with the rest of the world. Like a typical business account, BOP account also has two sides, credit side and debit side. In the credit side, all inflows or sources of foreign exchange are recorded. In the debit side, all outflows or uses of foreign exchanges are recorded. In the accounting sense, BOP is always balanced like trial balance as it is prepared as per the double entry system. However, in economic sense, BOP need not be always equal. It means BOP can be balanced or equilibrium. BOP is balanced when receipts of the foreign exchange are equal to the payments of the foreign exchange. It can be surplus. BOP is in surplus or favorable when receipts of the foreign exchange are more than payments of the foreign exchange. It may be deficit or unfavorable, that BOP is in deficit when receipts of the foreign exchange are less than payments of the foreign exchange. Balance of trade. Balance of trade refers to the balance of export and imports of visible items of trade. Balance of trade is merchandise balance. It shows visible trade transactions with the rest of the world. BOT is Vx minus Vm, that is value of export minus value of imports. Balance of trade need not balance itself. That is, it is not necessary that export of goods is always equal to imports of goods. Balance on trade can also be surplus or deficit. Surplus BOT means if a country exports more goods than what it imports, then the balance of trade is said to be surplus. that is, balance of trade is favorable for the country. Deficit BOT. If import of goods exceeds the export of goods, then the country is said to have a deficit BOT. That is, balance of trade is unfavorable for the country. Difference between balance of trade and balance of payments. Balance of trade and balance of payments are two related terms which are often used in the international economic scenario. However, they should be carefully distinguished from each other as they do not have the same meaning. BOT refers to difference between export and imports of visible items. BOP refers to an accounting statement that provides a systematic record of all economic transactions between the residents of a country and the rest of the world. BOT includes only visible items, but BOP includes visible items, invisible items, unilateral transfers, and capital transfers. BOT does not record any transactions of capital nature. BOP records all transactions of capital nature. BOT is a narrow concept as it is only a part of BOP accounts. BOP is a wider concept and it includes BOT. Unfavorable BOT can be met out of a favorable BOP. Unfavorable BOP cannot be met out of favorable BOT. That is the difference between balance of trade and balance of payments. Thank you.